Real-world assets on the XRP Ledger grew 102% last quarter, but the price fell 22%. Same network, same 3 months, two numbers pointing in the opposite direction. And if you're holding through this, that gap is probably the most confusing thing in your financial life right now. This is your XRP news desk. And today, the fundamentals and the chart go on the same table because one of them is wrong about this asset, and I think we can work out which. Here's what's coming. I'll show you the growth numbers, and they're real. I'll walk you through the two warnings the chart just flashed, one on the daily, one on the weekly, and what the death cross actually means when you say it in plain English instead of trader talk. And I'll give you the one number inside the growth story that actually explains the gap, because my read is that the number, not the chart, is the honest reason the price won't follow the fundamentals yet. There's a clock on this too, because something changes on Binance on Friday morning, which could make the price move much more than we expect. Let's start with the side that feels good. The fundamental case isn't a vibe, it's a stack of measured numbers, and they're big. There's a Blockworks report on the XRP Ledger's second quarter, and the numbers coming out of it look like a growth story. Stablecoin supply on the ledger grew 195% in the quarter, about $825 million. Tokenized real-world assets, treasuries, funds, real paper living on the ledger as tokens more than doubled, up 102.5% to $4.46 billion. XRP investment products pulled in another $253.6 million of fresh money on top. And RLUSD, Ripple's own dollar token, has quietly become the engine of the whole thing, up almost 40% to more than $880 million, now roughly 62% of everything tokenized on that ledger. That's not a press release, that's capital arriving on the network you hold a piece of, quarter after quarter in size. So the builder side of the story doubled. What did the price do? It fell 22% over that same quarter. And this quarter it's been worse. The price touched 98 cents and set a fresh low for Q3. And today it sits right around $1.02. It's up quite a bit for the day. $1 is the line this asset has defended since Trump back in November of 2024. And that streak is part of the chart story you need to hear, because it is the part that's genuinely at risk. As of last week, XRP closed above $1 for 635 straight trading sessions, every single day since November of 2024. So how close did we just come to losing it? Twice this month, on August 11th and again on August 14th. The price slipped under $1 during the day, partially because a bridge exploit drained roughly $200,000 through a connection between something called the TX chain and the XRP Ledger. Small money, but big nerves. Both times, buyers stepped in before the daily close, and both times the dollar held. And here's what the daily chart says now, and I'll describe it in a few words, because you don't even need to be looking at the screen for this. Take the market's smooth average price over the last 50 days. Now take the same average over the last 200 days. When the 50 line slips underneath the 200-day line, traders call that a death cross. And what does that cross actually tell you? Just this. The recent trend has been weaker than the long trend for a while now, mathematically, not emotionally. And XRP has printed that cross on the daily chart. Sellers have owned the short and medium trend for weeks, and the average just made it official. If you want the chart to be read to you straight like this, no pom-poms, subscribe, because that's the whole job of this trading desk. Now zoom out to the weekly, because this is where it gets heavier. The longest structure that's carried this entire run since the election is still intact. The 50-week moving average still sits above the 200-week moving average. So is the bull structure dead? No, not yet. And that's the gap that has been closing for months. And there's a strength gauge traders used to call the ADX, which didn't care about direction at all, only measures how hard a trend is trending. And any reading above 25 means a real trend is in place. And the weekly reads 33.7. That's a strong trend, and it's pointed the wrong way for anybody long. The daily reads about 22, just under the conviction line, a decline that's real but no longer violent. The selling isn't panicking anymore. It's grinding. So let's be honest about the map. The price hasn't even reclaimed its shallowest recovery level, up around $1.03. The zone that would genuinely change the conversation sits between roughly $1.07 and $1.10. And underneath, if $1 goes on a daily closing basis, there's not much obvious support until around 95 cents, with the biggest floor around 91 cents. The chart is bad, not broken. The weekly structure still holds, but bad and pretending otherwise would make this desk useless to you. Now, the number that I truly promised. Payment volume on the XRP Ledger fell 26.6% last quarter, while the assets on it doubled. If you hear that again, because it's the whole story in one line, the money arriving doubled and the money moving shrank by a quarter. Transactions are down, active addresses are down, trading volume on the Ledger's own exchange is down. And that slide has carried into this quarter, about 87 million transactions so far in Q3 against 222 million in all of Q2. All of this on a network where the average transaction costs 0.0024, which is basically free, so nobody gets to blame fees. Say it plainly, the money is parked, but it isn't moving. Value keeps landing on the ledger and then it just sits there. So why won't the market pay for that? Because markets don't pay for parked value. They pay for use, for flow, for somebody needing the network today. That's my reading, not a headline, but it fits every number on this table and it is the honest answer to the gap between the first two numbers. So who's wrong, the chart or the fundamentals? My honest answer, they might both be right, just on different clocks. The chart is telling the truth about now, and the fundamentals are making a claim about later, that tokenized assets and a growing dollar token usually get used and usage usually gets priced. I think that's the actual bet a long-term holder is making here, not a price bet, a sequencing bet, and I owe you what cuts against it. Standard Chartered's Jeffrey Kenjic carried an $8 target on XRP for 2026, and in this first quarter, he cut it to $2.80. The Senate left for recess without voting on the Clarity Act, so the market structure bill is still sitting there unfinished. The SEC even pulled its own vote on new crypto fundraising rules the same week, citing a scheduling issue. So the way I read the calendar, there is no cavalry coming for weeks. Whatever defends the dollar line defends it alone, which brings me to Friday and the warning this desk owes the crowd. What actually changes on Friday morning? Binance is doubling the maximum leverage on XRP and RLUSD in its portfolio margin system from 5x to 10x, effective this Friday, August 21st, 6 in the morning UTC. That parks XRP in the same leverage tier as BNB, Solana, and Dogecoin, Binance's top liquidity category. And my reader's placement is not a compliment, but 10x cuts both ways. And the report covering it made the point plainly. At the leverage, a small move against a position can trigger immediate liquidation. Now stack against that what's already out there. Whales have reportedly bought around 380 million XRP near the $1 level over the past week. Real demand at that line, again, but the buying arrived alongside roughly $1.5 billion in freshly opened leverage longs. And open interest in XRP futures on Binance jumped 28.6% in 2 weeks to $232.7 million in its highest since June, while the flow data shows aggressive selling still outweighing the buying. A crowd that leveraged, defending a line that thin, with double the leverage switching on come Friday. That's how an ordinary dip under $1 turns into a cascade of forced selling. And a lot of people are about to discover it with real money, which is exactly why none of this is financial advice. It is a desk reading the tape out loud. Tell me in the comments which side you'd back to blink first, the chart or the fundamentals, because I genuinely want this room's read. Here's where I land. The chart has earned your respect, not your panic. Your respect. Watch two things from here and ignore the noise. Watch whether the daily closes claws back above $1.04 to $1.08 area, because that is the first sign the sellers are finished. And watch whether the usage numbers payments, transactions, addresses turn up to meet the asset already sitting on the ledger, because the moment parked money starts moving is the moment that stops being a paradox at all. Meanwhile, the machine underneath never blinked. The ledger has validated more than 106 million ledgers and counting, and it did it through every single red candle. 635 days of buyers showing up at $1 is not what a dying asset does. And $4.46 billion of real-world assets, by read, does not climb aboard on this network without serious money plans. The foundation kept growing straight through a falling price, and the way that I read it, it is the strong hands tell, not the weak ones. Send this to one holder who's been staring at the price chart all week and losing sleep. Stack facts, not fear, and I'll see you in the next XRP video.